People love to believe they're smarter than the system, especially when it comes to money they don't actually have. I've watched it for nearly 100 years now. Smart people, educated people, successful people, they ruin their lives with debt they thought they could handle. They call it leverage. I call it lying to yourself with permission from the law. And if you're sitting there right now trying to decide whether to invest or pay off debt, well, you're already standing on the wrong side of the fence. You've allowed the idea of owing money to become normal. That's how money disasters begin, one clever excuse at a time. People think debt is harmless if they use it wisely. They tell themselves stories. My debt is cheap, my returns are high, so I'm winning. No, you're not winning. You're playing with fire while standing in a room full of gasoline. I've never met anyone who went broke without owing someone money first. That's not a coincidence. That's a rule of nature. The smartest investors I know don't sleep better because they own great stocks. They sleep better because nobody owns them. You can't build smart wealth with a dumb burden on your back. You can't think long-term when you owe short-term. And you can't call yourself free when someone else controls your next paycheck. Here's what nobody tells you. Debt changes how you think. It forces short-term decisions. It kills patience. And patience in investing is oxygen. I've seen people brag about beating the market while carrying high-interest loans. That's like bragging about swimming faster while your pockets are full of rocks. Eventually, you sink. When I was young, the Great Depression was fresh in everyone's memory. People understood pain. They feared debt like they feared disease. And that fear kept them alive financially. Today, we treat debt like a vitamin. Everybody takes it. Nobody thinks it'll kill them. But debt doesn't kill fast. It kills quietly. It kills when your luck runs out. You want to invest? Fine. But don't call it investing if you're doing it with borrowed money. That's gambling in a fancy suit. The only difference between a gambler and a person who invests with borrowed money is that the gambler knows he's gambling. I've seen borrowed money wipe out people 10 times smarter than you or me. Brains don't protect you from repeated stupidity. The math of debt is brutal. It grows against you with perfect discipline. And this growth, whether it's working for you or against you, never sleeps. I've often said the first rule of growth is never interrupted unnecessarily. Well, debt is the interruption. It's a parasite that feeds on your future. People ask me, Charlie, what if my debt is at 3% and I can invest at 7%? Well, genius, what if the 7% disappears? What if your investment drops 40%? What if you lose your job next month? Debt doesn't care about your predictions. Debt collects always. It's funny how people overcomplicate this. You don't need a spreadsheet to tell you what's right. You need common sense. If you owe, pay it off. If you're free, stay free. Because freedom grows better than any stock I've ever owned. In the end, wealth isn't about how much you make. It's about how little you owe. When you owe nothing, every dollar you earn belongs entirely to you. And when you control your time, your decisions, your peace, that's real wealth. So before you chase the next investment trend, ask yourself this. Are you building freedom or just decorating your prison? That's the real question. People like to think money is emotional, but it isn't. It's arithmetic. And arithmetic doesn't care about your feelings, your optimism, or your fancy investment theories. Let's talk about simple math, the kind you can do on a napkin. If you owe $10,000 at 15% interest, that's $1,500 a year guaranteed loss. You can't spread it around to make it safer. You can't protect against it. It's a guaranteed negative return. Now, tell me where you'll find a guaranteed positive 15% return in the stock market without taking risks. You won't. Not legally, anyway. That's the brutal beauty of debt. It's certain. And certainty is the most dangerous thing in finance when it's working against you. I've seen thousands of people obsess over their portfolio allocation while ignoring the debt interest eating them alive. They'll debate whether they should own 5% more of Apple or less of Tesla, while their credit card quietly grows faster than either of those companies ever will. That's not investing. That's pretending to be smart. It looks smart, but it's dumb as hell. You don't fix a leaking boat by buying a faster engine. You fix the hole first. Debt is the hole. Investing before you've patched it is just rowing toward the iceberg faster. People say, "But Charlie, the market averages 10% a year." Sure, over long stretches and with a stomach strong enough to handle a 50% crash without panicking. Most people don't have that stomach. They have a pulse. And when the market drops, so does their confidence. Meanwhile, their debt keeps growing like a metronome, steady, relentless, unbothered by market moods. The math doesn't care if the S&P recovers in 2 years or 10. Your lender wants his payment next month. When you owe, you're in a race between growing interest and growing wisdom. Most people lose because they underestimate how fast stupidity grows. You can't think clearly when the meter's running. Debt taxes your mind before it taxes your wallet. You start making urgent decisions instead of smart ones. You sell early. You panic late. You start praying for miracles. That's not smart investing. That's survival gambling. I've always said if you can't handle a little bad luck, you don't deserve good luck. But when you're using borrowed money, even a little bad luck can end you. That's why I've seen more investors ruined by debt than by bad stock picks. A bad stock teaches you humility. Debt teaches you despair. If you really understood math, you'd treat high-interest debt like a burning house. You wouldn't stand there analyzing the architecture. You'd get out. You'd pay it off even if it means delaying your grand investing dreams. I once told a student who wanted to invest while holding credit card debt, "You're asking me if you should invest or pay off a guaranteed 20% liability. That's like asking whether you should drink water or gasoline." The right answer is obvious. It's just inconvenient, and people don't like inconvenient truths. The truth is, paying off debt is the best risk-free return you'll ever find. It's boring, yes, but so is staying solvent. Everyone wants excitement until excitement sends the margin call. Then they discover boredom is underrated. The best investors I've known, including Buffett, never viewed debt as a tool for leverage. They viewed it as a virus. You contain it early, or it spreads until it kills you. So, when you ask me, should I invest or pay off debt, I'll tell you this. The person without debt can wait for an opportunity. The person with debt has to beg for one. And the market, my friend, doesn't reward beggars. You can't think clearly when you owe money. It doesn't matter how smart you are. Debt rewires your brain. I've watched brilliant people lose their edge because they were constantly calculating what they owed instead of what they owned. When you owe, your world shrinks. Every decision becomes defensive. You stop thinking about opportunity and start thinking about survival. That's not freedom. That's slavery with Wi-Fi. People like to say debt is a tool. Yes, the same way a chainsaw is a tool useful in skilled hands, catastrophic in careless ones. And most people, financially speaking, are careless. There's something deeply harmful about owing money. It eats at your independence. It changes the way you talk to your boss. It makes you tolerate things you shouldn't. It teaches you to make excuses instead of resist. That's why I've always respected the old-fashioned idea of living within your means. Not because it's virtuous, but because it's practical. You can't build good judgment in a mind that's constantly under pressure. You need mental space to think, and debt rents that space out to someone else. I've seen people make absurd investment decisions just to catch up. They chase risky stocks. They buy crypto in a panic. They listen to idiots on television shouting about quick returns. And the whole time they tell themselves, "I just need one good win." That's not investing. That's desperation with a spreadsheet. The irony is, people in debt often work harder than anyone, but their effort grows for someone else. Their time becomes interest income for the bank, and the bank, as you may have noticed, doesn't get tired. You can't buy peace of mind on credit. You can only rent it briefly before the bill comes due. That's why I never understood the obsession with good debt versus bad debt. They're both dangerous. One kills you slowly, the other quickly, but both keep you from sleeping well at night. You want to build real wealth? Start by removing financial anxiety. That's your foundation. Every dollar of debt you eliminate is one less chain on your mind. And a free mind, well, that's the ultimate growing machine. When I was a young lawyer, I didn't have much, but I didn't owe anyone either. That made me dangerous in the best way. I could walk away from bad deals. I could say no without fear. That single advantage, independence, was worth more than any borrowed money ratio. Most people never realize that the true return on paying off debt isn't just financial. It's psychological. It gives you back your ability to choose. It restores your ability to wait. And patience, as I've said many times, is the rarest form of intelligence in investing. So ask yourself, what's your goal here? To look rich or to be free? Because if you pick the first, the second will never happen. Every generation convinces itself it has reinvented the meaning of debt. They give it fancy names, good leverage, capital optimization, financial efficiency, but strip away the jargon, and it's the same old stupidity dressed in modern clothes. Borrowed money in any form makes outcomes bigger, good and bad. The problem is human nature guarantees the bad will show up eventually. And when it does, borrowed money turns a stumble into a free fall. I've seen this movie more times than I can count. It always starts the same way. Someone borrows to speed up gains. They tell themselves they're being rational, that they're just using other people's money intelligently. And for a while it works. They make a few smart moves. The numbers look great, and their confidence swells. They start believing they've mastered risk. Then the market sneezes. Interest rates tick up, one deal goes wrong, and suddenly everything they built starts collapsing like wet cardboard. That's not bad luck. That's arithmetic meeting reality. I've said it before and I'll say it again. If you're highly leveraged, you don't own your assets. They own you. You're just renting the illusion of prosperity. In the 1,970 seconds, Buffett and I watched brilliant people blow themselves up with borrowed money. It didn't matter how great their businesses were, a few bad quarters, and the lenders came knocking. The graveyard of capitalism is filled with geniuses who optimize their balance sheets. Even today, I see people justify borrowed money because interest rates are low. That's like saying you should play Russian roulette because the odds look good this round. Eventually, the chamber turns. Here's the real tragedy. Borrowed money doesn't just destroy portfolios. It destroys temperament. You can't stay calm when a few bad weeks threaten to wipe you out. You can't think long-term when the short-term can kill you. And once fear enters the equation, intelligence leaves. That's why Buffett and I built Berkshire with almost no debt. Not because we didn't understand borrowed money, but because we understood it too well. We wanted to survive every environment, not just thrive in the easy ones. The ability to sit still when everyone else is panicking, that's the ultimate advantage. And you can't do that if the bank owns your nerves. People ask me, Charlie, what about using debt to buy real estate or invest in a business? I tell them, if you need to borrow heavily to make a deal work, the deal isn't good enough. It's that simple. The best opportunities don't need borrowed money to shine. They're attractive even when funded conservatively. The moment your investment depends on the kindness of creditors, you're no longer an investor. You're a hostage. I once heard someone brag about borrowing at 3% to invest at 6%. I told him, you're earning 3% and risking 100%. He didn't like that answer. Most people don't. They prefer a pleasant illusion to an unpleasant truth. The truth is, borrowed money makes you fragile. It converts a temporary setback into permanent loss. It punishes arrogance faster than stupidity. And it ensures that one day you'll meet the margin clerk, the most unforgiving teacher in finance. If you can't sleep at night, you're over-leveraged. If a market drop ruins your plans, you're over-leveraged. And if you need good luck to stay solvent, you're not an investor. You're a gambler praying for mercy. My advice, don't play games with borrowed matches. The house always burns faster than you expect. People think the goal is to get rich. It isn't. The real goal is independence. You don't want more money so you can buy more things. You want it so you can stop doing stupid things. And nothing is stupider than trading your freedom for borrowed money. Debt sells the illusion of progress. It whispers, you can have it now and pay later. But later always comes, and when it does, it collects with interest, both financial and psychological. I've watched people chain themselves to jobs they hate because they need the income. I've seen families delay happiness for decades because they were buried under manageable mortgages. I've seen investors with great judgment make cowardly decisions because their loans dictated their behavior. That's not wealth. That's slavery wearing a necktie. Freedom doesn't come from owning more. It comes from owing less. When you don't owe anyone, you can think clearly. You can say no when everyone else has to say yes. You can ignore the crowd, ignore the panic, ignore the noise because you're not desperate. People underestimate how powerful that is. Independence is like oxygen. You don't notice it until it's gone. In the 1,990 seconds, I watched a generation of investors borrow against their homes to buy tech stocks. They thought they were clever. They called it financial engineering. Then the bubble burst and they discovered a simple truth. You can't eat paper profits when the margin call comes. The irony is those who avoided borrowed money looked boring for years until everyone else blew up. Then suddenly boring looked brilliant. That's the story of capitalism in one sentence. I've said this 1,000 times. You don't need to be smarter than everyone. You just need to stay sane longer than everyone. And staying sane is impossible when you're using borrowed money. People think I'm obsessed with avoiding debt. They're right. I am, because I've seen what happens when life doesn't go according to plan. And it never does. You lose your job. You get sick. Markets crash. And the people who survive aren't the ones with the biggest portfolios. They're the ones with the smallest obligations. That's the paradox of wealth. The freer you are, the richer you feel. And that feeling doesn't come from a brokerage account. It comes from control. Control over your time, your choices, your peace of mind. That's why I tell people the best investment you'll ever make isn't in a stock or a company. It's in buying back your independence. $1 of debt at a time. You can't put a price on sleeping well at night. You can't grow wisdom when you're under pressure. And you can't make rational decisions while someone else has a claim on your future. When you have no debt, you can wait for the right pitch. When you're using borrowed money, you have to swing at every ball that comes your way. That's the difference between discipline and desperation. So, yes, freedom beats borrowed money every time. It might look slower. It might look less exciting, but it's permanent. And permanence in a world built on ups and downs is the ultimate competitive edge. You'd think after centuries of financial disasters, people would learn. But no, every generation starts fresh with the same delusions. They all believe they found a smarter way to balance debt and investing. The young ones call it using borrowed money responsibly. The older ones call it letting my money work for me. And all of them forget that money only works when you're not already chained to it. I've said it before, the human mind is brilliant at lying to itself. We make excuses for stupidity faster than we correct it. So when people tell themselves, I'll invest while slowly paying off my loans, what they're really saying is, I want to feel rich while still being poor. It's an emotional strategy disguised as financial planning. And emotion is the enemy of smart finance. I remember a young man once asking me, Mr. Munger, shouldn't I invest instead of paying off my student loans? The market always goes up long term. I told him, son, markets go up long term, but you don't live long term. You live month to month, year to year, and debt grows daily. He looked disappointed because he wanted a clever answer, but in life, it's the simple arithmetic that saves you, not the clever theories. People always look for borrowed money because they hate the slow path. They can't stand the idea of spending 5 or 10 years cleaning up their finances before investing, so they jump ahead. They invest first and tell themselves they'll manage the risk, but reality doesn't care about your impatience. If you skip the boring steps, you don't speed up, you detonate. Buffett and I built Berkshire on a simple foundation: discipline first, growth second. That's why we never had to sell assets in a panic. That's why we could sit through 1,973, 1,987, and 2008 without losing sleep, because we never let debt dictate our decisions. Most people don't have that luxury, not because they can't, but because they won't. They're addicted to comfort. They can't delay rewards, so they try to engineer it with borrowed money. They want to look successful today, not be successful tomorrow. I've seen this story end the same way every time. Debt gives you a little boost in the beginning, then slowly eats you alive. It's like sugar, quick energy, long-term decay. And here's the most tragic part. When you live under debt, you lose your tolerance for risk at the exact moment when opportunity appears. You'll see a market crash, and instead of buying, you'll panic because you need cash to survive. The brave become fearful, and the foolish become broke. Debt doesn't just ruin your finances, it ruins your timing. It makes you a slave to ups and downs. It forces you to react instead of think. I've said many times, the best investors in the world don't need constant excitement. They need endurance. But endurance only comes from strength. And you can't be strong when you're using borrowed money. So yes, most people get this backwards. They think investing will save them from debt. In truth, avoiding debt is what allows you to become a great investor. It's the boring work, saving, living below your means, cutting expenses, that builds the foundation for growth. But people skip it because it doesn't look glamorous on social media. They want fast results, not permanent results. Well, the world rewards permanence. And the graveyard of finance is full of people who mistook speed for intelligence. So here's my advice. If you ever find yourself bragging about your efficient use of debt, stop. You're one downturn away from humility. Debt doesn't just take your money, it steals your time. And time, as I've said all my life, is the raw material of growth. You see, growth only works when you give it decades to do its magic. Debt destroys that timeline. It forces you to focus on the next payment instead of the next decade. That's the part most people miss. They think the cost of debt is just the interest rate. No, the real cost is the distraction. It steals your ability to think long term. It poisons your patience, which is the single most valuable investing trait you can have. When you owe money, your brain becomes a short-term machine. You start thinking in weeks and months instead of years. You can't let investments mature. You can't sit through downturns. You can't stay rational when your lender wants cash, but the market offers chaos. Debt makes people fragile, and being fragile is the enemy of growth. I've met countless investors who could have built fortunes if only they'd been able to wait. But you can't wait when you're using borrowed money. You sell at the wrong time for the wrong reason to the wrong buyer. And the worst part? You call it being disciplined. No, that's not discipline. That's survival. Buffett and I built our wealth by avoiding situations that forced us to act. We wanted to choose when to move, not need to move. That's the difference between freedom and slavery. I once said the first rule of growth is to never interrupt it unnecessarily. Debt is the mother of all interruptions. It's the financial equivalent of pulling a plant out of the ground every few months to check if it's growing. And yet people keep doing it, constantly refinancing, borrowing, rolling over balances. They call it financial management. I call it financial self-sabotage. Here's a rule nobody teaches in school. Every dollar you owe is a dollar that can't grow for you. And every year you spend paying down old mistakes is a year stolen from your future freedom. If you start investing at 25 and stay debt-free, time becomes your friend. If you start investing at 35, buried under loans, time becomes your enemy. Same person, different outcome, all because of borrowed money. People love to talk about the power of compound interest, but they forget it works both ways. Debt grows too, just in the opposite direction. It's like running a marathon while dragging an anchor. When you're debt-free, the smallest progress grows. When you're in debt, even great progress gets erased. That's why the rich stay rich. They let growth work for them without interruption. And that's why the middle class stays stuck. They spend their entire lives growing wealth for the bank. It's a quiet trap. It doesn't explode like a crisis. It erodes like rust. One late payment, one refinance, one temporary loan, and suddenly you've lost 5 years of growing power. People think getting rich is about intelligence. No, it's about staying in the game long enough for growth to work. And debt kicks you out of the game early. So, the next time someone brags about how they're using borrowed money smartly, remember this: you don't beat growth by being clever. You beat it by being consistent. Debt interrupts consistency. And interruptions over a lifetime cost fortunes. Stay out of debt. Stay in the game. Let time do the heavy lifting. That's how ordinary people become extraordinary investors, slowly, silently, and without borrowed money. People keep asking the wrong question. They say, "Charlie, should I invest or pay off debt?" As if it's a math problem. It isn't. It's a question of ownership. Who owns your time? Who owns your peace of mind? Who owns the next 10 years of your life? If the answer isn't you, then the debate is already over. I've said it before. The world is full of people who look rich but aren't free. They drive leased cars, live in mortgaged houses, and invest borrowed money. They've built beautiful cages, and they're too busy decorating them to notice the lock on the door. That's the tragedy of modern finance. People mistake activity for progress. They think juggling investments and loans makes them sophisticated. But complexity doesn't make you smart. Simplicity makes you safe. I once knew a man in the 1,960 seconds, a lawyer, well-educated, sharp as a tack. He always bragged about how he used smart borrowed money to invest in properties. He'd lecture everyone on efficient capital allocation. Then one recession later, the bank owned everything. He didn't lose his intelligence. He lost his margin for error. That's what debt does. It removes your margin for error. And when you remove that, you remove your survival buffer. Buffett and I never tried to be the smartest investors. We tried to be the last one standing. That's a much smaller target and a much better one. You see, when you're debt-free, you can afford to wait. When everyone else panics, you can think. When others sell, you can buy. And when opportunity knocks, you can open the door because nobody's holding it shut from the outside. People think financial freedom is a destination. It isn't. It's a condition. And it begins the moment nobody else owns your decisions. The modern investor wants both freedom and borrowed money, but they're opposites. One gives you control, the other sells it. You can't be half independent any more than you can be half pregnant. You're either free or you're owned. If you still need to check with the lender before making a decision, you're owned. If you still calculate your risk tolerance based on monthly payments, you're owned. If your peace of mind depends on interest rates staying low, congratulations, you're renting peace. And rented peace always expires. People don't understand that debt is a quiet master. It doesn't shout. It whispers. It tells you, don't take that risk. Don't quit that job. Don't wait for the right opportunity. It shapes your behavior until you think you're making your own choices. But you're not. You're just managing obligations. And the great irony, most of the people who get trapped like this were only trying to be financially responsible. They wanted to build credit or use borrowed money intelligently. And they ended up serving a system that never sleeps. I'm not saying don't invest. I'm saying earn the right to invest. You earn it by first buying back your freedom by killing the debt that owns you. Once you've done that, the math of growth becomes your friend. You can sit still. You can let time work. You can ignore the noise because you're not playing defense anymore. So, should you invest or pay off debt? The real question is simpler. Do you want to own your life or owe it? Choose once, choose wisely, because that choice grows too. People hate the word slow. It offends their ego. They want results now, the body in 6 weeks, the fortune in 6 months, the freedom in 6 years. But that's not how growth works. Growth demands patience. And patience is impossible when you owe money. That's why the slow path, the one built on saving, staying debt-free, and investing steadily looks boring to most people. They don't realize that boredom is the secret ingredient to lasting wealth. When you remove debt from your life, time becomes your partner instead of your enemy. You stop racing, you start growing, and slowly, quietly, the world tilts in your favor. The trouble is, nobody brags about slow wealth. It doesn't look impressive. There's no excitement in living below your means or paying off a mortgage early, but there's enormous peace in it. And peace is what allows wisdom to grow. I've seen people chase hot stocks, crypto, fads, housing booms, all fueled by borrowed money. They call it taking advantage of opportunity. I call it taking advantage of delusion, because every cycle ends the same way. The people using borrowed money get crushed and the patient get rich. Wealth built slowly doesn't crumble. It survives recessions, inflation, bad presidents, bad luck, because it's not built on momentum. It's built on margin of safety. Buffett and I never got rich fast. We got rich for sure, and that's a better deal. Every investor should carve this into their brain. Speed kills growth. You can't rush exponential growth. You can only avoid doing stupid things long enough for it to happen. And debt, my friend, is the stupidest thing you can normalize, because while you're paying interest, someone else is earning it from you. Every loan you take is an investment you made for your lender. That's the paradox of getting rich slowly. The moment you stop chasing fast money, your real wealth begins, because you finally stopped interrupting growth with nonsense. I remember once telling a young man who complained about how long it would take to get rich through saving and investing, "Do you plan on living a long time?" He said, "Of course." I said, "Then why not spend it getting rich slowly? It's the only method that actually works." Most people want to sprint through life. I prefer to endure it. The sprinters make noise. The people who endure make money. That's why the debt-free path isn't just financially smart. It's philosophically smart. It aligns you with time instead of against it. And time, unlike borrowed money, never betrays the disciplined. So yes, pay off the debt, then stay debt-free, then invest patiently, then wait. You'll look slow for a decade. Then one day you'll look brilliant, and the world will call it luck. But it won't be luck. It'll be math, patience, and the absence of stupidity. That's how growth rewards those who respect it, not with speed, but with certainty. If there is one lesson I've learned after nearly a century of watching people win and lose money, it's this: the game isn't about getting rich. It's about staying free. Every financial decision you make should serve that single purpose: freedom from debt, freedom from desperation, freedom from stupidity. Because once you lose freedom, everything else becomes negotiation, and you can't negotiate with compound interest. It always wins. People ask me, "Charlie, what's the smartest financial move an ordinary person can make?" I tell them, don't overborrow, don't rush, don't envy. Do that for 50 years and you'll look like a genius. But people don't like simple rules. They prefer complicated lies. They want a shortcut that feels sophisticated. They want to optimize before they've stabilized. Well, you can't optimize chaos. You can only get rid of it. And debt, whether it's on a credit card or a balance sheet, is organized chaos. It guarantees instability. It ensures that no matter how good your ideas are, you'll always play defense. Look, you can't predict markets. You can't control recessions, inflation, or interest rates. But you can control whether you owe someone money. That's real power. The investors who sleep best at night aren't the ones earning the highest returns. They're the ones who can go to bed knowing no one can call in a loan tomorrow morning. That peace of mind grows faster than any index fund. Buffett and I used to say we'd rather be vaguely right than exactly wrong. Well, paying off debt is vaguely right every time, because it might not make you rich fast, but it makes you impossible to ruin. And in this world, not being ruined is the best competitive advantage there is. I've lived long enough to see bubbles come and go, housing, tech, crypto, you name it. And every time the same pattern plays out. The debt-free people get mocked on the way up, then envied on the way down. They look dull in good times and divine in bad times. That's the reward for being rational when everyone else is reckless. You can't build a good life on borrowed stability. The world's too unpredictable for that. But you can build one on discipline, patience, and the refusal to owe. So if you're still wondering whether to invest or pay off debt, here's my final answer: pay off the debt always. Then invest from a position of strength, not weakness. Let your money grow, not your anxiety. Because when you finally owe nothing to anyone, something extraordinary happens. You start making decisions for the right reasons, not the pressured ones. And that, my friend, is the true definition of wealth. Not the number in your account, but the silence in your mind when nobody owns you, not the market, not the bank, not your desires. When you reach that point, you've already won the game. That's the only kind of wealth worth pursuing, the kind that lets you wake up every morning and think clearly, without fear, without pressure, without someone else's claim on your time. I've watched fortunes come and go. I've seen brilliant people lose everything and average people build empires. And the difference was never intelligence, it was freedom. The freedom to wait, the freedom to say no, the freedom to think. You want to know the best investment I ever made? It wasn't Berkshire Hathaway. It wasn't See's Candies or Coca-Cola. It was the decision to never owe anyone anything I couldn't pay back immediately. That single choice gave me 70 years of growth without interruption, no margin calls, no desperate decisions, no sleepless nights, wondering if the bank would come knocking. Just time, patience, and the freedom to let good ideas mature. That's worth more than any borrowed money return you'll ever calculate on a spreadsheet. So here's what I want you to remember when you close this and go back to your life. Debt isn't just a financial decision. It's a philosophical one. It's a choice about how you want to live. Do you want to spend your life managing obligations or building opportunities? Do you want to react to the world or respond to it? Do you want to be owned or free? The math is simple. The psychology is hard. But if you can get both right, if you can kill the debt and stay debt-free, time will reward you in ways you can't imagine today. Because when you're free, really free, the world looks different. Opportunities you couldn't see before suddenly appear. Risks you couldn't take before become manageable. And decisions you couldn't make before become obvious. That's what financial independence does. It doesn't just change your bank account. It changes your perspective. And perspective, well, that's the rarest thing in investing. You can't buy it. You can't borrow it. You can only earn it by refusing to let anyone else own your future. I'm 99 years old now. I've seen everything twice and learned it once. And if there's one truth I'd bet my life on, it's this: the person who owes nothing fears nothing. That's the ultimate competitive advantage in a world built on fear. So, pay off the debt, stay free, invest wisely, and let growth do what it does best: reward the patient and punish the reckless. That's not just good advice. That's the only advice that matters. Because in the end, wealth without freedom is just poverty with better furniture. And nobody, not even the cleverest investor alive, can grow their way out of that truth.